Marcus Wellington had everything Wall Street promised. Harvard MBA, corner office at a prestigious investment firm, an $8 million portfolio at 35, and supreme confidence that came from never being wrong about money. When he met Rosa Delgado at a 2006 networking event, he barely masked his condescension. Rosa was a Filipina immigrant who'd arrived in New York 15 years earlier with nursing credentials and $300. She now owned a small Filipino grocery in Queens and had started investing her savings. "So you're getting into investing?" Marcus asked, with patronizing politeness. "Let me guess, mutual funds." "Very safe, very boring." Rosa smiled. "Actually, dividend-paying stocks mostly, companies that make things people always need. I diversify but keep it simple. Businesses I understand. Stable income, reinvest the dividends. Like running my sari-sari store but with stocks." Marcus laughed. "That's adorable. But you're leaving so much money on the table. Real returns are in leverage, derivatives, mortgage-backed, securities. That's where sophisticated investors make serious wealth." He showed her his portfolio, complex instruments she didn't recognize. Leveraged positions amplifying returns, exotic derivatives promising massive gains. "See this, up 47% this year. Your dividend strategy might make 5, maybe 8%. That's naive, Rosa. You're thinking like a small business owner, not someone who understands modern finance." Rosa listened politely, the way she'd listened to many Americans explain things to her like a child. "Mr. Wellington, in the Philippines, my grandmother ran a sari-sari store. She taught me, don't borrow what you can't repay. Don't invest in what you don't understand. Always keep emergency savings. Make sure income comes from many sources." Marcus shook his head with amused pity. "Fine rules for a corner store, but high finance is different. It's sophisticated, complex. You need to think bigger." He handed her his card. "When you're ready to get serious about wealth, call me." Rosa took it politely but never called. She continued her naive strategy, buying shares in companies making soap, food, utilities, healthcare, boring businesses paying steady dividends. She avoided debt, kept 6 months' expenses saved, and diversified for stability, not excitement. Just like her grandmother diversified sari-sari store inventory, so no single product failure would destroy the business. By 2007, Marcus's portfolio hit $12 million. He'd leveraged positions, borrowing money to invest more and amplify returns. His firm celebrated him as a rising star. He bought a luxury condo, German sports car, watches costing more than Rosa's annual salary. He saw Rosa once more at an event, still doing the dividend thing. At some point you have to take risks to build real wealth. Playing it safe is just another way of losing. Rosa smiled. "My store does well. My investments pay dividends every quarter. I sleep well at night. That feels like winning to me." Marcus heard only confirmation of his superiority. Then came 2008. The crisis didn't arrive like a storm, it arrived like an earthquake. The mortgage-backed securities Marcus heavily invested in, the complex derivatives promising unlimited upside, the leveraged positions that amplified gains, they collapsed simultaneously. September 2008, Marcus watched his $12 million disintegrate. The leverage that multiplied gains now multiplied losses. When you borrow money to invest and investments fail, you don't just lose your money, you owe money. Margin calls came like hammer blows. His firm demanded more cash or they'd liquidate everything. He had no cash, everything was invested, leveraged, tied up in worthless instruments. By October, Marcus's portfolio was worth $1 million. By November, he was $800,000 in debt. The condo went into foreclosure. The car was repossessed. By March 2009, Marcus Wellington was bankrupt. Not just broke, legally bankrupt. Debts exceeding assets, reputation destroyed, career ruined. He took a job at a small firm, starting over at a fraction of his former salary. Humiliation burning daily. Meanwhile, Rosa's portfolio also declined. The crisis spared no one. Her stocks dropped 30, 40, even 50%. It was terrifying watching her savings shrink. But Rosa had no debt. She hadn't borrowed to invest, so couldn't be forced to sell at the bottom. The companies she'd invested in making soap, food, utilities, medicine were still operating. People still needed these products during recession, maybe more. Dividends were cut but didn't stop entirely. Rosa didn't panic and sell. She remembered her grandmother during the 1990s Asian financial crisis. When everyone is scared, hold steady. The sun will rise again. It always does. So Rosa held steady, kept working, running her store, living modestly. When stocks were lowest and everyone was selling in panic, she used her emergency savings to buy more shares at basement prices. By 2010, recovery began. Rosa's companies started growing again. Dividends increased. Stock prices recovered. By 2012, her portfolio was back to pre-crisis value. By 2015, it had doubled. In 2016, 10 years after their first meeting, Rosa walked into a financial planning seminar. The speaker was Wellington. He'd rebuilt a modest career, humbled, now teaching everyday people about financial planning. His message had changed dramatically: avoid excessive leverage, understand investments, maintain emergency funds, don't chase exotic returns. He was teaching Rosa's grandmother's wisdom without knowing it. After the seminar, Rosa approached. He didn't recognize her at first. Then his eyes widened. "Rosa, it's been years." She smiled warmly. "Good seminar, Mr. Wellington. Very practical advice." Marcus showed embarrassment and curiosity. "Your investment strategy, the one I called naive. How did you do during the crisis?" Rosa showed him her portfolio summary. Marcus stared in disbelief. "You've more than tripled your original investment. You survived 2008 and came out ahead." Rosa nodded. "I lost 40% at the bottom. It was frightening. But I had no debt, so couldn't be forced to sell. The companies I owned kept operating. People still needed soap and food during recession. I held steady, kept working. When prices were lowest, I bought more." Marcus sat down heavily. "I lost everything, Rosa. The leverage, the complexity, the sophisticated instruments, they destroyed me. I was so certain I was smarter than everyone else. I called your strategy naive when it was actually wise." Rosa sat beside him. "Mr. Wellington, you weren't wrong about everything. Leverage works when times are good. But my grandmother knew something Wall Street forgot. It's not about how much you make when everything goes right. It's about whether you survive when everything goes wrong. A sari-sari store doesn't maximize profit on every item. It stays open every day, serves the community, survives bad times." She continued, "I kept it simple not because I couldn't understand complexity, but because complexity hides risk. I avoided debt because debt means someone else controls your choices during crisis. I invested in boring companies because boring means essential and essential means survival. My grandmother survived wars, coups, financial crises. She taught me being steady is more important than being exciting." Marcus nodded, arrogance finally gone. "I wish I'd listened 10 years ago. I wish I'd understood your naive approach was sophisticated risk management disguised as simplicity." Rosa smiled. "You're teaching those lessons now. That's worth something." They talked for an hour. Marcus asked detailed questions about her strategy, her crisis decisions, her discipline in not panicking. Before Rosa left, she said something Marcus would remember forever. "My grandmother used to say the sari-sari store survives because it knows its customers and serves their real needs. Even when fancy stores come and go, Wall Street got rich creating fancy products nobody needed, that even creators didn't understand. When crisis came, fancy products disappeared, but real needs remained: food, shelter, medicine, utilities. I invested in real needs." Mr. Wellington, that's not naive. That's just honest. Years later, Marcus wrote a book about financial planning for ordinary investors. He dedicated it to Rosa Delgado, who taught a Wall Street analyst that wisdom isn't measured by complexity. The book became a bestseller, teaching Rosa's principles to millions. Rosa still runs her store in Queens. Her portfolio now supports her retirement and scholarships for nursing students from the Philippines. She never became Wall Street wealthy, but became something better: financially secure, debt-free, confident. Her wealth was built on principles that had survived every crisis her family faced. The naive Filipino immigrant with her simple strategy had beaten Wall Street's best simply by remembering where she came from and refusing to forget lessons learned at her grandmother's store, lessons more valuable than any Harvard MBA.